net interest margin has dipped by 5 basis points for the amalgamated entity, and you should see that also reversing and going up, because we've already reduced our deposit rates across the board by 25 basis points. So you should see an improvement in margins as we go ahead. The domestic credit growth is at 5.2%. Retail loan growth continues to be very steady at 20% plus, led by secured assets such as home loans and auto loans. The gross NPA ratio is very stable at 10.3 odd percent versus 10%, so not much change there. The net NPA ratio is also pretty much stable, 3.65 versus 3.95. The provision coverage ratio continues to be quite high. It is running at 77.34 and 64.1% versus 77.7 and 65.9. So pretty stable over the last 2 quarters. The capital adequacy ratio is at 11.5%. CET1 is at 8.5. Notably, the bank is working on realizing revenue and cost synergies as we move ahead. The business strategy of the two banks which have been amalgamated with Bank of Baroda. So the business strategy is aligned now, and as we move ahead, you should see an improvement in the credit growth because the processes and products have been harmonized. This is a picture of the amalgamated entity which existed. We've done the breakup for you so that it gives you a clearer idea of what is the overall customer profile, how each bank what has brought to the table, what is the overall market share addition. So the overall market share from the standalone at 4.12% for deposits has gone to 6.32. So that's almost more than a 200 basis points jump. Similarly, there's a jump of 200 basis points for advances in terms of market share. So the market share of the bank has seen a steady increase. The cost to income ratio also, you will see in the subsequent slides that it went up in Q4, but it has stabilized back in Q1. And Q1 this year and Q1 same period last year are actually has been an improvement for the overall amalgamated entity. At the same time, the domestic margins we've shared with you overall is at 2.84, global is at 2.71. All these numbers are on an annualized basis. This is the progress in the quarter. So where we were on April 1 and how we have ended the quarter in certain parameters. So you'll see the credit cost is quite stable. The cost to income ratio compared to Q4, which is March 31, which was at almost 66%, is below 50%. So there has been a sharp improvement in cost to income ratio. Cost of deposits are very stable quarter on quarter sequentially. Yield on advances are also very stable sequentially. So that bodes well for the overall margins of the business, and we have cut our deposit rates by 25 basis points. So you should see the cost of deposits coming down as we move ahead into the quarter. This is a slide on the key drivers. So you'll sorry. Yes, correct. So more importantly, as the MD has correctly pointed out, there was a very high weightage of bulk deposits in Vijaya Bank. So that has also come down over time, and that will also lead to a sharp improvement in margins as we go ahead. So this is the overall snapshot in terms of the key operating performance. The most important highlight over here is that the net profit for the amalgamated entity is at 710 crore. For Q4, there was a loss of 8,875 because of the cleanup, and in Q1 FY19, there was a loss of 49 crores. So there is a sustainable level of profitability which is kicking in for the overall business. This is a snapshot of the business as on 30th June. We've already gone through most of these numbers, so I'll skip this slide. This is the market share. We've already seen in the slide earlier also how market share is moving for the overall business. So there's a jump of almost 200 basis points. This is the business performance. So you'll see there is the increase in CASA deposits is at almost 7% and the overall CASA ratio has come off a little bit, but it's quite stable at 36.55% as of June, and it compares with 37.26 as of Q4, which is March 19. These are the numbers on averages. On an average basis, actually, CASA has done much better. We are seeing an improvement in our CASA ratio to almost 36% from 35.5% in Q4. This is the CASA growth continues to see an improvement. This is an important slide. We continue to see secured assets such as home and auto driving our growth. The home loan, the growth in retail loans continues to be substantially high at 20% plus, and within that home loan business is growing at 70%, which is in line with the industry rate. This is the rating profile. So the amalgamated bank, the rating profile also continues to see an improvement. In most importantly, the incremental business that we have sourced or origination has been done in the corporate book. Most of it is in A and above, which is almost 70%. This is the optimization. This is the yield on advances. It is moved up from the March 19 number. It's at 8.73 versus 8.65. The financial inclusion business also continues to see a steady improvement. We are seeing more and more transactions and increase in balances over time. These are some of the slides. The market share in the business is at 14.3% versus 14% as of March 19. So there's a 30 basis point increase, almost 25 basis points increase in market share. These are the treasury operations. So treasury has seen an increase in the profitability, as we've seen in the first slide. So this is the breakup of the overall treasury business. The modified duration is for HTM is at 5.14 and for overall is at 3.99. This is the international business. So if you look at the international business, it has also made a steady turnaround. You'll see in June 19 versus June 18, there is almost a 13.6% increase in advances of the international business. And this is the breakup. So you're seeing a steady acceleration in the buyer's credit, in the trade credit product, which was only at 756.7 crores in June 18, is it more than 15,000 crores. So there's a 15,000 crore acceleration in that part of the business after we introduced the supplier's credit business or the product. So in terms of, so that summarizes the overall business. We're seeing an improvement in the international business. The domestic business will also accelerate as the products and processes have been harmonized, and you'll see all the three different banks which have come together continue to fire at a decent pace in terms of growth. This is the overall number in terms of interest income and expenses. So as we pointed out, interest expenses actually increase at a slightly higher pace because we've had some high cost deposits or bulk deposits which we have been able to roll back. So this should see the increase in interest expenses now should be more in line with the interest income. So NII should grow pretty much in line with the increase in interest income. And customer fee income has also seen an acceleration, which is in line with, which is slightly higher than actually the overall increase in the outstanding advances. So operating profit as a result has increased by almost 4% to 4276. As we highlighted in the earlier slide, the cost to income ratio actually in Q1 FY19 was at 49%. 49.24, and now it's fallen to 49.18%. So that number is steadily below 50, even in the amalgamated entity when we were in Q1 FY19. This is the overall situation in terms of the interest income and expenses. So we've already seen this is just a breakup. This is the non-interest income, which has seen the total fee income has increased by almost 8%. And as you will see that the trading gains from the treasury have actually increased to 338 crore from 151 crore in Q1, and that is because interest rates have been very, very favorable from the treasury standpoint. More importantly, if you look at the customer forex income, if you bring all the three banks together, from 64 crore that has gone to 206 crore. So there has been a large jump in the overall forex business in the quarter. So as a result, the overall other non-interest income has increased at 16% and total non-interest income has increased at 10.5%. And some of this will continue because Treasury should report reasonably good results in the coming quarters as well. This is the picture of the overall operating expenses. So the overall operating expenses have grown pretty much in line with the increase in NII, slightly higher, but it's pretty much in line. And this is the overall breakup. Depreciation has increased a little bit on the higher side. That is because of revaluation of assets that was done in some of the other erstwhile banks. But apart from that, we are seeing the overall operating expenses have been kept in check. This is the position with regards to operating profit and provisions. So overall provision for NPA is at 3168 crore and total provisions are at 3566 crore for the quarter. So compared to the operating profit of 4276 crore, and as a result we have a net profit of 710 crores. Now we'll move to the asset quality side. On the asset quality front, the slippage ratio, first of all, has fallen sequentially. It was almost at 5%, 4.94%. It has come down to 3.3% almost. So that is positive. And as a result, the credit cost is also coming off. So credit cost was elevated in Q4 FY19 because of harmonization and making sure all the three banks had a similar estimates and policies in terms of provisions and accounting policies. So now, since that has been done, the credit cost actually has come off materially to 2%. This is the provision coverage ratio. As you will see, the provision coverage ratio continues to be relatively high. It was at 66% in March 19. In June 19, it's at 64.1%. So it's quite stable. And provision including TWO is actually pretty much flat at 77.7 versus 77.3%. These are the net NPA ratios. They're also pretty much in check at less than 4% for both the quarters. This is an important slide. It tells you the overall slippage ratio, how it has moved in the three entities. So you'll see the erstwhile Bob, actually the numbers are very stable for the last 3 quarters. So, and these numbers should stabilize in the other banks as well as we move ahead. This is the overall exposure to the NCLT accounts. As you will see, the overall NCLT 1, 2, we've just bifurcated the overall exposure, which is at 37,000 crore, and the overall provision coverage ratio is actually fairly high at 88.7% almost. On the overall, and for the NCLT 1 list, it's almost at 97.5% now. This is the asset quality and the watch list. So we've given the breakup of the entire watch list. So we've added certain new categories as well. This is the movement of portfolio under SMA. As you'll see, there is a sharp reduction in the SMA portfolio in 1 and 2 over the 2 quarters. I think the left side is 1 and the right side is 2. So we'll not mark that, we'll just earmark that. Now we'll come to the overall capital adequacy of the bank. The capital adequacy as of March 19 for the amalgamated bank was at 10.38%. That stands at 8.49%. So there has been changes with respect to, as you saw, there was an infusion of capital from the Government of India of 5,042 crores. With respect to that, there has been a reduction because of the loss that we have booked in the last quarter. So because of which this has come down, and plus there has been some changes which we'll take it in Q&A and explain why the capital adequacy ratio where it is. However, for the consolidated entity, the capital adequacy ratio is at 12.12% versus the standalone entity, which is at 11.5%. This is shareholding pattern, and there are certain slides on integration, but I think these questions, it's better if, I think, sir, they are answered when we are doing the Q&A, right? So for that, sir, should we open it for some opening remarks and then we do the Q&A? Yes. Switch on your mic.
Previous quarter was around 10,000 crores. Could you give us a comparative
number? 10,760 relates to the erstwhile Bank of Baroda portfolio. 2,884 relates to. Sorry. I said 10,700 relates to the Bank of Baroda portfolio. The 2884 relates to the erstwhile Dena Bank, and 2856 relates to the erstwhile Vijaya Bank. So these are, let's say, 16,500 crores mass and manus, out of which 10,000 relates to BOB and the balance 6,500 relates to these two companies. As of now, no?
No, the comparative figures are.
No, these are the absolute numbers, since you asked for the absolute number. Could you give me light at? Oh, okay, SMA. I'll give it to you. 10,064 is the SMA 2 number on a consolidated basis. It's kind of fairly stable, primarily because the comparative points are as follows. We have a bit of a spike with respect to Dena Bank, Vijaya Bank, but the rest of the two portfolios are fairly stable, mass and manus stable.
So just cross-checking, this is SMA 2, right?
Yeah.
Yeah, it is SMA 2, that's correct. How do you read this one? Oh, okay, this way. Oh, okay, this way I read it.
So were you able to sell any bad loans to ARCs this quarter?
No, we could not.
Your recoveries have fallen pretty sharply.
Yes, that's been the. So when you look at all the numbers together, the broad theme is as follows. The numbers in Bank of Baroda, which is unaffected entity, has been quite strong, and the other two companies are going through a process of fitting into and developing getting into the new system, all of that stuff. And there's so much of people movement and training and all of that stuff. So it's entirely explainable that momentum would pick up. But the positive thing is Dena Bank's balance sheet actually increased on the lending side. So there's a revival over there. Next quarter, we won't be able to give you all this data because there is a lot more integration that will happen and the balance sheet starts to looking like one. So that's part as far as the growth is concerned. The revenue numbers therefore reflect the growth story. The slippages, when you look at it, I think when a broader industry comparison are reasonably consistent with that, in a percentage sense, is fairly flat to what has been there for the last 3 or 4 quarters, with some minor movements. As far as recovery is concerned, it's been a tad lower. And some of it actually came back in the first week of July, but there is no way of accounting for it in that sense. So yes, that's an area that we need to work through as we go into the next quarter. And we are fairly confident it will be a much better second quarter from a recovery standpoint.
Any reason for the recovery being lower?
There's no particular reason for the recovery being lower. Or rather, we don't want to give any explanation or justify. It's something that you need to do better, period.
So the credit growth for the combined entity was 6.4%. What was it for Bank of Baroda standalone? And going forward, how do you see it for the combined entity?
Mas a Manus, Bank of Baroda was 14%. Depending on which metrics we use, on an average basis it was higher, on a terminal basis it's around 14%. So we've been staying with a 15% kind of number on a quarter-on-quarter basis. This must be the sixth quarter of the number. Now, as I mentioned to you, the way the credit, when you do a comparative exercise, becomes challenging is because in March 18, Dena Bank moved into the PCA. So through June, through December, through March, the balance sheet is declining. So when I take now, I'm at the point little bit better than the lowest point. So in some sense, it is the nature in which the balance sheet has been constructed. And that's why the numbers are coming down only to 7%, because it is embedded. Next quarter when we go, it will be better, because the portfolio would be giving more, and in a comparative sense, the runoffs are there. And then you go down to March of next year, it look a lot better, because then we are taking the lowest point of a particular portfolio and then looking at it with the highest point of the same portfolio. So we're in a kind of inverse position right now, which is why the growth numbers are kind of misleading.
Any guidance for the full year, and from where do you see the growth coming from?
Good question. It's a very, very good question that you're asking in the context of all the challenges that seem to be there. We are seeing a growth in the following 4 or 5 ways. One, we're getting into better account planning and the corporate banking, and we see that as an opportunity to, as a consequence, increase our share with some of our better customers. There seems to be some scope for it. There also seems to be some scope on better utilization of limits and drawdowns and those kinds of stuff that is there. But the significant change we're making in the corporate banking side is to get into better account planning for the purpose of selling more MSME, getting more payroll account, doing vendor financing, supply chain financing, etc. And more important, focusing a lot on trade, which is not balance sheet effective, but it will be revenue positive. The retail businesses, we think, will continue to grow at the rate it's currently growing, partly because of the partly because many of the participants have kind of retraced back. There is obviously an opportunity to go. Plus, we are forging partnerships through co-origination. That would provide us with a room to grow. And we're doing a lot of work on the digitization and digital acquisition channel that will give us the growth. Insofar as MSME business is concerned, it's largely working on the supply chain and the value chain of the customers. And that's really a derivative of what we are doing in the corporate bank. It's a very targeted approach towards customers. So I think, therefore, I do think that the opportunity for growth remains. We stay with the broad forecast of a 15% growth number as we look at it in the quarter. But our shift now is more towards looking at the fee income and thereby looking at better return to equity. And that's one of the most significant focus area from our perspective. For instance, our cash management, which is reasonably embryonic, today has over 1,600 customers with about 4,500 crores of current account. And we expect that number to be hitting something like 5,000 to 6,000 customers when we come to March. So it's substantially increasing the number of people, putting the resources behind. The supply chain is working for us in terms of getting new customers. We've added 50 customers, out of which 25 are new, and they're top-notch companies. So as a consequence of which you get entry into the market. When we look at some of our shares in the trade particularly, there seems to be a lot more opportunity to work together, work it up. So yes, a growth of 15% is quite likely on the cards from a perspective, and I hope it might be slightly higher than that.
So was it any chunky account that slipped in this quarter, or was it a mix of several smaller ones?
Well, it was a collection of accounts. The largest was 430 crores, which was an ILFS road project called Baroda. And then we had a few accounts of 200, 150, etc. And so it was a more distributed one. We did not have anything very large slipping. Most of it, as you know, has already slipped.
Okay. And so your NIMs have declined slightly in this quarter. Do you have a guidance on that?
When we look at the standalone NIM of BOB, that's slightly higher than what it was last year. We do have a situation where the NIMs are lower. So the standalone numbers are yeah. The primary issue is the composition of the deposit, the mixture of the current account to savings account, arising from the different mixes of the amalgamated vehicle. And that's really the cause of a higher rate. Because, for example, our earlier current account to ratio was around 41%. Now that's dipped to some 36. So there is a decline because of the composition. The other thing is the nature of the deposit and the pricing of those deposits. So that's the reason why the cost was higher, that it contracted the NIM to some extent. But you see, the net difference is, I think, 14 or 15 basis points, right, in the contraction. So these kind of movements happen sometimes.
Credit cost guidance for the full year? Any guidance on the credit cost?
The guidance on the credit cost is depending on different assumptions we have and different outcome we have. The range could be from 1.25 to 1.75.
You've
On an
reduced
average balance sheet of about 6,75,000 crores.
You've reduced your savings account rate just yesterday. It's been brought down to 3.25%. Firstly, what is the strategy there? Because that will probably be the lowest in the industry. Do you not see that many customers moving their deposits out of the bank just because you've reduced that savings account deposit? Firstly, does that matter at all?
We'll see. I think we are anticipating a lower interest rate regime and moving in line with that. Now, if those changes don't happen, there is an impact. Then we'll have to deal with it as appropriate. So
how much of a change does that make to your cost
it's
structure?
not a significant change at the end of the day. Although it has declined, it's not a very steep one. Was it 25 basis points kind of it's a reduction?
And this is for deposits which are below 50
Overall
lakh.
deposits have reduced.
That will be a majority of
Yeah.
pool.
But they don't, all the deposits don't mature tomorrow. They
Sure.
kind of maturing over a period of time. Yeah.
Sir, with co-origination of loan you said for MSME schemes, have you already decided how many partnerships with NBFC for
Yeah, it's an ongoing normal business for us. We do have partnerships and we'll continue to focus on building them.
Any specific sectors that you're watchful of right now that are raising concerns and probably if you have any exposure to certain sectors that you think that could potentially become NPAs or give us a
I
kind
think
of
we have
slowdown that
tried to
see?
reverse the whole approach differently. In the past, we used to have customers coming into us, and then we used to map them with the sector, etc. And then you do a lot of credit approval. You go back and tell the client, "Sorry, I can't do the business." To a mechanism where we have a predefined list of customers and a predefined limits, and our focus is only going to talking to those people, right? So, therefore, it's kind of we've done our own exercise in terms of the portfolio mix that must be there, where we are present, where we are not present, geographical distribution, all of that stuff, and then and it's therefore a very defined approach towards hosting customers. But we do see a lot of opportunity in the corporate bank and the other parts of business in the partnerships. So, for example, we are financing a large company. Then today we're financing the equipments that come for the various equipment provider. We're providing for the commercial vehicle that is standing over there. We're opening some payroll accounts. We're discounting some lorry receipts and making some advance payments. So our approach now is to look and occupy the whole thing. On supply chain, for example, we started with supply chain as a hub and a spoke. Now it is hub, spoke, and spoke itself is a hub, and there are further spokes. So the whole thing is moving in that direction. So I think what I'm hoping is that there would be a further pickup in our exposures to or a growth to the MSME and the retail businesses, but stemming from the strength of the corporate relationships.
सर पिछली तिमाही में आपने जब ऑटो सेक्टर की स्थिति खराब थी तब भी आपके जो ऑटो लोन का पोर्टफोलियो है करीब 20% से बढ़ा था और इस तिमाही में जब देख रहे हैं कि ऑटो सेक्टर बहुत ज़्यादा खराब प्रदर्शन किया है फिर भी आपका ऑटो पोर्टफोलियो बढ़ा है, तो कितने % से उसकी बढ़ोतरी हुई है? इसके अलावा एक और चीज़ जो अभी प्रेजेंटेशन में बताया गया कि जो होम लोन सेगमेंट है वो भी करीब 17% से बढ़ा है, तो ये क्या माना जाए कि जो NBFC पिछले 4-6 महीने में जो कारोबार नहीं कर रही है तो वो पोर्टफोलियो थोड़ा बहुत आपकी तरफ शिफ्ट हुआ है? दूसरा सवाल मेरा ये रहेगा कि जो अभी टैक्स डिपार्टमेंट की तरफ से बैंकों को डिमांड की गई है कि जो सर्विसेज बैंकों ने फ्री में अपने कस्टमर्स को दी थी तो उसका जो GST है और सर्विस टैक्स है वो भरना पड़ेगा, और अभी आपने कहा भी है कि फ़ी इनकम पे काफ़ी ज़्यादा जोर रहेगा, तो ये क्या माना जाए कि जो सेवाएं थी अपने कस्टमर्स को वो बैंकों की तरफ से फ्री दी जा रही थी तो आगे चलकर अब वो फ्री नहीं रहेगी?
नो 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 नो, अब मैं लास्ट क्वेश्चन को आंसर करता हूँ। फ़ी इनकम का इंक्रीज ऐसा नहीं है कि हमने फीस को बढ़ा दिया। इसका मतलब है कि हम ज़्यादा इंश्योरेंस करेंगे, ज़्यादा कैश मैनेजमेंट करेंगे और एक्सपोर्ट फाइनेंस करेंगे, इंपोर्ट फाइनेंस करेंगे, उस तरह की ग्रोथ है। इट इज़ ग्रोथ, जो बिजनेस है वो ग्रो होने के कारण फ़ी का ग्रोथ है। इसका मतलब नहीं है कि आज कल चेक बुक के लिए और 25 बेसिस पॉइंट चार्ज करेंगे। दिस इज़ बिल्ट ऑन ग्रोथ ऑफ फंडामेंटल बिजनेस। और सेकंड क्वेश्चन जो आप पूछे हैं ऑटो लोन,
डिमांड कितनी है वो जो
डिमांड फॉर व्हाट?
टैक्स डिपार्टमेंट की तरफ से, क्योंकि सभी बैंकों से जो सेवाएं दी गई है उसके ऊपर
वी डोंट हैव एनीथिंग टू आवर नॉलेज।
Some of the banks have gone, yeah.
See, but the matter is sub judice. So let us see what happens in it.
बट वो इट डजंट मूव द नीडल फॉर अस। उसके वजह से हमारा P&L का सिग्निफिकेंट चेंज नहीं होगा, उसका इम्पैक्ट उतना नहीं होगा। एज फार एज कस्टमर्स और मॉर्गेज ऑटो जो भी है, वी लेंड टू कस्टमर्स नॉट टू द इंडस्ट्री। तो कस्टमर का प्रोफाइल है, डाउन पेमेंट है, क्रेडिट स्कोर है, प्रायर हिस्ट्री है, so that's what it is। and ये अभी हमने इस महीने, it's not a last quarter growth of 20%, it's been happening for the last 8-9 quarters।
नहीं सर, अभी लेकिन ऑटो सेक्टर तो अभी पिछले 10 सालों में सबसे ज़्यादा खराब प्रदर्शन दिखा रहा है।
नहीं, सेल्स वॉल्यूम हैज़ कम डाउन। इसका मतलब नहीं है कि जो कस्टमर्स गाड़ी खरीद रहे हैं वो खराब लोग हैं। आई थिंक वी आर कंफ्यूजिंग द इशू। टोटल अमाउंट ऑफ सेल्स ऑफ ऑटो इज कमिंग डाउन, but the people who are buying auto are not necessarily going to be worse customers or anything like that. We can't draw this conclusion. We have a score, उस हिसाब से हम सेलेक्ट करते हैं और हमारा प्रोसेस भी है। इसका एक ही थिंग है कि मार्केट शेयर हमको थोड़ा और बढ़ेगा, बिकॉज if the market comes down and your volume goes up, तो मार्केट शेयर का ग्रोथ होगा।
Has the growth in the auto segment slowed down or moderated?
Not for us, we have to see।
No, we have in fact this quarter grown by almost 32% in the auto sector. So I mean, we the market, we have gained a share only.
So I will give you an example। अगर आप मॉर्गेज लोन के बारे में बात करेंगे या कोई लोन के बारे में बात करेंगे, हमारा डेटाबेस में है 5 मिलियन कस्टमर्स जो किसी और बैंक के लिए इंटरेस्ट दे रहे हैं लोन के लिए। वो सब हम माइग्रेट कर रहे हैं हमारे तरफ से, और एक कस्टमर हमारे कस्टमर हैं, फॉर एवर रीज़न उन्हें किसी और से लोन लिया, किसी और से। सो बिकॉज ऑफ इन्वेस्टमेंट इन एनालिटिक्स एंड टेक्नोलॉजी एंड ऑल ऑफ दैट स्टफ, वी हैव अ लॉट टू डू विद द 120 मिलियन कस्टमर्स वी हैव गॉट, एंड वहीं से हमारा ग्रोथ हो जाएगा।
Sir, while that part is fair, but you also have pushed on the supply chain management side and the SME side. Are you expecting any kind of impact because of the auto sector slowdown on some of your SME customers, people who might be providing services to the larger auto companies?
As of now, I think the layer of customers we are doing seems strong enough to absorb the volatility in the demand. But as you know, anything if sustained for a long period of time could cause concerns. We hope the cycle will turn around quite quickly. And the other thing, one of the other things we have to notice is the extent of export that's happening from India. And so that is something we are not looking at. But if you look at the motorcycle industry, auto industry, for example, you look at the export of Hyundai and Maruti and all of them. So there is a volume which we are not adding when we look at the total production quantity. So there is a buffering happening on account of that as well.
So, don't you know your strategy around ARC sale? I think you earlier never did ARC sale. You were less on it. You picked up, but now it seems like the ARC sales have reduced across the industry. Could you throw some light on what has changed?
See, from our perspective, the rule book we had is fairly straightforward. We need to be paid in cash and not any other kind of instruments. The slowdown probably is attributed to a number of factors. One, of course, is capital. The other is liquidity. And the third thing also is that certain degree of uncertainty now between secured and unsecured creditor, which is getting sorted out. So there has been obviously a reduction in the size of the market. Or conversely, those who are willing to buy are asking for a much steeper rate than what we would think is the right thing to do.
So what is the quantum of mudra loans on your book and what is the delinquency in that book?
Up to percent data.
We have Mudra loan portfolio of around 8,000 crores, 8,022 crores to be more precise, and the delinquency is almost 10% in that portfolio.
So do you think that this is because of the poor underwriting standards, credit due diligence that banks are doing? Because if we see a comparison with private sector banks, they don't have such poor delinquency ratios.
No, that's not the way to look at it. Whenever a new program is launched, you're testing different segments of the customer, and it's possible that some segment doesn't perform. So what? You cut it out and move and work with the segments that perform. So unless you have bad loans, you can't understand who's a, I mean, you need both good and bad customers to understand who's a bad customer and who's a good customer, right? So that's really what it is. And what we have seen in our experience historically is that some of these mudra loan customers become mid-sized companies. Some of them become super-sized companies. So this entrepreneurship has got its own momentum, right? So from our experience, there is a large part of the portfolio that is excellent, large markets which performance is very good. And all that we do from this, looking at this delinquencies, is to understand which segment is not performing and then be careful about that segment and then grow those segments that are performing as well. So I'm not pessimistic about the Mudra loan program.
So you will continue to grow the book?
Yes, to the extent we know. For example, give you an example of, this pink auto in Jaipur. We have hardly any customer who has not paid. The delinquency is is close to zero. So if you go to Bhilwara, for example, in general, whatever we do, the repayments are fairly low. There are other markets where the story is slightly different. And so from there you have some strong lessons that come in. And so you work through certain types of program which creates definitive income, and it's not of a consumption nature, then it tends to perform. Smaller ticket loans on Mudra tend to have a characteristic of consumption, in which case the repayment could be different, correct? So on the balance, put everything together, it's fascinating to see those customers who have taken loans from us, and over a period of time, many of them will emerge into valuable customers for the bank, in the sense that balance sheets will be larger than what they currently have, and they'll do more banking with us than they currently do.
So also I have one question on rationalization for the merged entity. Is there a number arrived for rationalization for branch and ATMs, and what's the cost saving?
See, we have done different types of cuts on the branches. If you look at branches which are 300 meters of each other in urban India, which means you just walk across on the side, that number is about 200 or 250. If I were to increase the 300 meters to a larger number in a semi-urban location, then that number increases. So our number has been in the region of 1,400, 1,500 locations that are close to each other. And we are working on them right now. But we want to, my primary priority in the first phase of the amalgamation is to get the organizational structure in place, get the work towards getting the technology in place, get the convergence with respect to, compensation, get convergence with respect to value systems. Those are the things. In the second phase, we'll start working towards the overall broader optimization of cost and maximization of revenue.
But would it be correct to say that you would look at rationalizing 1,400 to 1,500 branches? Is that correct?
No, it is not. That would not be a correct statement to conclude. What I'm saying is that these are the set of branches on which we are having a hard look. But supposing we had 4 branches near each other in Bandra, what's wrong with that? Because it's a very, it's a very large market in some sense. So I think it varies. You can't draw that conclusion in that manner. But yes, that gives you a list to work from on rationalization. On the other hand, we're also looking to increasing the branches in many locations. The formats are different. But today, for example, ports is an important area for us. And so we'd like to see greater presence and visibility there, as a case in point. Schools and educational institution is an important area for us. So we'll see greater hospitals, we'll see a greater visibility of them. So yes, this is a continuing process of churn, that you merge something and you open new thing, such that you have a much better outcome than you did before you do these things.
So you said that you want to improve your return on equity. Is there a number in your mind? How are you going to go about it?
So what we have indicated and said is that we would like to see us hit a 9-10% return on equity in this financial year.
What is it now? I mean,
So our net worth is around 45,000 crores or thereabouts. So if we hit a 4,500 crores of net income, profit after tax, we'll be close to that. If we take 700 something as a manus for this quarter, and remember, the busy seasons comes a little later, it seems to be a reasonable expectation to reach that number, to reach that goal, or reasonable, let's put it this way, high probability of reaching that goal.
and in percentage term, what is it right now? I mean,
So you take 711 multiplied by 4, that is 2,800, as opposed to the 4,500 I must have. So it's around 4-5% kind of return on equity at this stage.
I also saw that Tier 1, core Tier 1 is about 8.5, which is borderline, which is not too high, but it's near the 8% mark. Do you all need capital this year? Is there a plan for capital raising?
Yeah. Is against this 8.68, we are at 9.56, so slightly higher than the minimum regulatory. Right. But we need a capital for growth, and that is why we are going for ESPS, Employee Stock Purchase Scheme. We have requested Government of India to give us a permission for raising additional Tier 1 capital, right? And our profitability is also there. So it's put together, we will have a capital for our growth. Presently, our RWA is around 50% of our exposure. So, if with the capital we can grow 18 to 19 times. So whatever capital we will get 18 to 19 times growth on that.
Okay, so but how much you plan to raise, in the sense, is there a target on the ESPS and
1,500 crore we are planning to raise through ESPS.
Totally, between all the schemes is around 4,000.
4,500 is 81 plus 1,500 is around 6,000, and we can also go for raising capital as and when we need.
Through QIP only.
Through
So in the
QIP
near
or
term, our objective is to raise the 6,000 crores of capital. That will keep us, but under all circumstances, we see that the operating profit will be more than the provisions we need to take.
Okay.
And therefore, the capital is fundamentally required to support growth.
So how much on the QIP? How much on the QIP? You mentioned QIP.
No, I'm saying there is an optionality available, which we'll do after we close these.
yeah, after that will exert.
So how near is this near term? I mean, by when do you plan to raise these?
And we're looking at this quarter, some of those things
Yeah.
will materialize.
And any non-core asset sale that you will look at, any update on?
Yeah, we've been able to identify a certain amount of non-core with respect to properties, businesses, etc. We have planned for something in the order of 560 to 500 to 600 crores by December of this year, and the properties, etc. have been identified, and it will go forward. And we expect some sale from our existing portfolio of other non-core assets.
Which are these? Which are these, sir?
Just properties that we don't use or it gets rationalized. We'll put a list, some of them are good properties, you should buy them.
So the total number is 600 crores by December?
That will be correct.
How
much through the other divestments you said?
A little early, but things are beginning to look up quite well. So I wouldn't be surprised if we were able to get another 1,000 to 1,500 crores through other divestiture. But that would be weighed towards the third and the fourth quarter.
So which would these be? Which entities would these be?
Listen, there's a broad set of pool we have got from that. We have to carve out some of them. There's an overall improvement that we can see from happening. But there's also, lottery tickets we have purchased. We are hoping some of them will get us.
Sir,
NPA in MSME. Okay, around
Sir, can we
11%.
quote you on the lottery tickets?
Lots of them.
The delinquencies in the MSME sector is around 12% at the moment.
But they have been trending down. On a delta basis, let me tell you what we are doing to protect the MSME business. First is much more targeted acquisition through supply chain and all of that stuff. Second, we have a CMR rating, which is a proxy for a CIBIL credit rating by CIBIL score. And all our new acquisitions are in the 1 to 4 category or 1 to 5 category, which effectively means the probability of default is much lower. And the third thing is we have now tied up an arrangement with CRISIL to provide us with a level of additional underwriting and comments, which will also help us to originate more portfolio. So it is targeted approach of knowing who you want to go in, coupled with a couple of layers of data rating of the information, and some level of support from other groups who will give us a good sense around this industry. All of that together would ensure. So on a marginal basis, if you were to look at our trending NPA, it's been declining quarter after quarter, which essentially means the new portfolio is performing in a very significantly positive way.
So the cut in the savings rate, how much will it really percolate to the NIMs this year and in the next quarter and going forward?
Difficult to say, because there's also going to be the transmission of lower rate back on the MCLR rate as well.
Yeah.
But the way to improve the net interest margin is to ensure that the incremental non-earning assets come down. That's really the point. So if incrementally we lend money and the slippages are low, or the net slippages are low, then the net interest margin starts moving up in that sense. So I think through a combination of better lending side management, we will do well. We need to do well overall. So that's what it is. But there are so many moving parts.
Sure.
But I think our goal is to hit a 3% net interest margin on the domestic side,
Okay.
and hit a 2% net interest margin on the international side, and that's what we're working to.
Okay.
That's in this financial year? Sorry. That's in this financial year?
Towards the end of this financial year, yes.
Okay, so ending the year with those kind of things.
Yeah.
Okay, just to take off on Joel's question, don't you think that the fact that you're cutting your savings deposit rate will possibly cannibalize on the CASA ratio that you're trying to push up at this point of time? Do you not have any worries about the SA getting impacted because of this? There are 6% schemes that are running right next door, so.
True, there are all of these issues, but there is a certain issue, there is a certain benefit that comes from large distribution. There is a certain benefit that comes from brand. There is a certain degree of comfort, or a huge degree of comfort. People draw on the name because of the government ownership behind it. So, and there is an element of convenience and everything else as well. So how do we grow CASA? We are working on 2 or 3 things. One is to have more interaction with the companies and develop more salaried account. Second, our targeting process has improved to get customers with larger balances. On the financial inclusion customers, as for example, Jan Dhan account, we are running a couple of programs around how we could increase the savings of those people, because they invest with chit funds and others. So we're running some interesting experiment and programs around that whole exercise. But a large part of current account is going to come from the payment system. That's really where the heart of the current account growth is. And there is an investment in cash management and different types of payment systems that will effectively propel the growth in the government. And finally, there's a lot of effort around building relationships with the government, being a part of the direct benefit transfer, being part of the various other kind of flows that happen, and being part of that ecosystem. So also there is a variety of things we are doing to improve current account and savings account. Interest rate is one of them, but not the only item in decision making.
So on the slippages, you said it's crucial that the slippages are under control for margins to improve. Are you confident? You've had 1 full quarter now of the merged entity. You've had a chance to go through everything. Are you confident that there could be no more skeletons in the cupboard for both the other banks What's your sense of?
That's the most unwise thing to say that. What I think is happening is that the recoveries will start increasing a bit better as we go in. And some of these recoveries will be in written off accounts, so there will be a bounce back to the operating income as well. Right? We tried to contain the slippages, but there are some set of issues that are emerging with, say, for example, non-bank finance company, a couple of exposures which you are well aware of. So there is some amount of those kinds of incipient stress that is there. But we're trying to look at it as a more balanced approach. We'll control the slippages on one hand, and we'll get better realization, collection, upgradation on the other side. And we are working with a larger stock of NPA accounts, so statistically we should do better as well.
So how many ICS have been signed? Like how much do you take a resolution?
How many ICS?
Because I think nearly 25 of them in consortium, like registration. I remember we got the ICS that been signed. So your bank has signed how many ICS?
It depends on how many of these consortiums were present also, right? I think we signed 4 is what I understand. 12.
12 accounts we have signed ICS.
12.
So,
What is your exposure to the troubled NBFC and the troubled diversified conglomerate?
the ILNFS and D.
No. I meant ADAG.
Okay.
Well, those are matter of public, it's all been published also. You have the data in the public domain as such.
We don't have yours.
Yeah, of course. Because these companies put out who they are borrowed from, and it's out there in the public domain. So you have all this information. Unless, sorry? No. Companies have put out where they are borrowed from. You can go to the ILFS site and get whether it's red, green, yellow, whatever you want to get. So in ADAG we have
Total together 4,200.
It is-
Stressed NBFCs.
together is 4,200.
4,200.
This is stressed NBFCs across the board.
So what's the update on the AMC? What's the update on the AMC? We were expecting an update in the early part of last quarter.
I think we're pretty much close to executing the final agreement, and there is a regulatory process through which we need to go through. We should be announcing it in the month of August.
It's a fresh stake that they will take, or they will take a part of your stake. They'll bring in fresh equity, right?
The combined entity will have a better equity, better equity. Yes, that will be there. But we are not cashing out anything.
Yeah.
That's what I mean. Everything goes into the company.
Economic data has not been that good in the last 6 months or so. Markets are not very. I mean, people are waiting for the budget. Budget has happened and it's not really cheered anyone. Your sense of how we are doing on the ground and what's the outlook for the year?
Don't talk about it. You see, it's difficult to envisage an absolutely linear growth. There are some stresses that have happened in the sector. We are all aware of them, including consumption-related demand, which has slowed down. I do think probably the way out that it is going to happen, or one of the ways out it is going to happen, is a lower interest rate regime that in theory that would affect in stimulating growth again. We've seen the way the Government of India 10-year yield curve has gone, right? So we're going to see the effect of it. I would see that as one of the ways in which the economic growth would get further ignited. And the second thing is that as far as a bank or an institution is concerned, our growth is not tied to the industry growth. It is always a bit higher. And that's for a variety of reasons, including how products you have, process you have, certain amount of consolidation that is happening on debt by corporates. They want to have fewer bank accounts. All of those things also act in terms of the ability to grow.
So what about progress on insolvency law? The way it is moving right now.
Looks good. I mean, once this comes in, I think look, the preamble to it is essentially saying that the process needs to work in the framework it is set out to. And that's the first part. And second, it clears the ambiguity and the waterfall of the cash flows. These are the two things, the last two issues that has been engaging the court. Now, if you put these behind, logically the speed has to move, the development, the recoveries have to move forward.
But not many banks are looking at filing more cases into insolvency, despite the amendments or, despite the resolutions.
You mean more companies are going to NCLT?
Yeah, I mean, banks are not looking at insolvency as an option. They're preferring other way out, right?
No, see, those are all necessary. You first try to revive a company. You try to see whether the existing promoters, then there is IC and a resolution plan. So in any economy, you'll have a bouquet of options, and you choose one that fits a particular context well.
So do you have room for direct exposure to NBFCs further?
We continue to be lending in the market, but I think a way of working together seems to be that you build a much stronger coordination platform.
Okay.
So that the NBFC comes in with a certain amount of funding, which is substantially smaller in relation to the total exposure. And we get the benefit of a credit process, which we test it with our own standards, norms, KYC, etc. So I think for a period of time, I think the NBFCs which want to grow would use coordination as a method of retaining the combined market share. The market share, when you combine the coordination volume with their own volume and look at it as a market share kind of thing, then that's how I think it will go. So I think it is there, but then all companies are not in the housing space. There are commercial vehicle companies that seem to be comfortable in raising money. There are new age companies that is working on different types of MSME and others where people like us are interested in financing the segments their testing is new, and it might be good to know about how those are performing. So it's better not to draw a single line on this whole thing. It's a component, and we are open to doing business with them, and we continue to do business with them. But where the exposures are larger, we are saying the right way to go about it is to do more coordination and manage it that way. To some extent, the securitization was essentially a deferred coordination program. Right, so this is not deferred, it just starts in the beginning, so it should be okay.
So on that note, should we take a last question, or?
I think we're done. I mean,
okay.
Unless you go ahead, please, push Vijay. We work on the consortium, it's a kind of a consortium-related approach. So yes, they approached us as they approached all of the banks. And we all work together to come to a decision. So that's how it is.
Okay.
And we are not the largest in that lending space, so we don't take the lead of that.
So would we be attaching the assets? Banks have an issue when enforcement directorate attaches assets to Sterling Bank also for that matter. Do banks need to go ahead?
So, well, there are rules or regulations or law in the country. There is something, the PMLA Act, and then it has got its own approach in terms of how they dispose or money realized from a disposed assets will be dealt with. So those are all law, it's not an individual decision. So if it comes under PMLA, then it becomes a government property effectively. And then the recoveries come from that. Unless you are established this is not from proceeds of crime. So I think it depends in this sense.
Okay. So on that note, we'd like to thank everyone who's taken out time for the the press meet. And we have refreshments out, so please help yourself before you go out. And